Welcome to The Explainer. Today, we're unpacking a quarterly filing from Surana Solar Limited that is, honestly, remarkably dramatic. You know, if you follow the renewable energy sector, you're probably used to these reports feeling like routine, boring paperwork. But every so often, a company drops a statement that literally makes you do a double take. And that's exactly what we've got here with Surana Solar's unaudited results for the quarter ending June 30th, 2026. We're going to skip the dense accounting jargon and uncover the real drivers behind this massive financial surge.
So here's our game plan for decoding this 5-page PDF. We'll start with the Q1 power surge, decode the financial results, look at how solar products drive revenue, explore their leadership in land transformation, and wrap up with the auditor's final word. Let's jump right in.
Section 1. The Q1 power surge. Let's look at this massive profit increase.
When we're evaluating quarterly performance, our eyes usually dart straight to the bottom line, right? Well, for Surana Solar, that bottom line is an absolute showstopper. 544.07 lakhs. That is their unaudited net profit for the period ending June 30th, 2026. For a single quarter, that's a massive figure. It immediately grabs your attention and practically screams that something highly unusual and highly profitable went down over those 3 months. But to really wrap our heads around the scale of this number, we need a little context. We need to see exactly where they were just 3 months prior.
And this brilliantly illustrates the sheer scale of the jump. Compare that massive Q1 profit of over 544 lakhs with the immediately preceding quarter ending March 31st, 2026. That previous quarter, it sat at a mere 19.80 lakhs. We are talking about a quarter-over-quarter profit multiplier that is absolutely staggering. I mean, it immediately begs the question, how? What exact mechanisms flipped inside this business to generate such sudden, explosive profitability? Moving on to Section 2, decoding the financial results. Let's take a look under the hood. To figure out how they pulled off this incredible profit leap, we've got to dig into the details. I mean, a profit surge doesn't just happen by magic. It's always about expanding revenues, shrinking costs, or some unique combo of unexpected events. Let's break down those revenue streams. Total income hit a really impressive 2350.60 lakhs, but the breakdown is where it gets interesting. Revenue from standard operations was 1715.06 lakhs. Solid for sure. But look right beneath that. They brought in a very healthy 635.54 lakhs, categorized simply as other income. When you stack that total income up against their total expenses of 1713.53 lakhs, the math is crystal clear. That other income acted like a giant financial cushion, falling almost entirely to the bottom line and directly driving that 544 lakh profit we just talked about.
But wait, there's another major clue hidden over on the balance sheet. The company's unallocable corporate assets surged to 3,015.34 lakhs. Why is that such a big deal? Because just 1 quarter ago, that number was only 1,853.04 lakhs. Those assets basically doubled. And unallocable assets are things like cash, corporate investments, or headquarters property, stuff that isn't tied to one specific operation. A jump of this magnitude tells us that some major capital shifts are happening behind the scenes at the corporate level, totally mirroring the dramatic changes we saw in the income statement.
Section 3, solar products drive revenue. This is the operational engine. Now, what's really interesting about this slide is seeing exactly where that operational revenue engine actually lives. Surana Solar breaks its operations down into 2 main segments, solar products and renewable energy. You'd probably think a green energy company would have a somewhat balanced portfolio, right? Well, look at this breakdown. Almost the entire operational revenue is driven by solar products, pulling in 1,713.42 lakhs. It completely dwarfs the renewable energy segment, which brought in a microscopic 1.64 lakhs for the quarter. It's not a balanced scale at all. It's almost exclusively weighted toward manufacturing and selling solar products.
We can really solidify this dominance by checking out where the company actually parks its physical and financial assets. The solar products segment commands a massive asset allocation of 4,259.05 lakhs. Contrast that against the minimal 29.94 lakhs tied up in renewable energy. This tells investors loud and clear that despite having 2 named segments, Surana Solar's current operational reality is almost entirely defined by its solar products division. That is where their capital lives, and that's exactly where their operational cash flow comes from.
On to Section 4, leadership and land transformation. Let's look at their strategic moves. You know, the numbers only ever tell half the story. The rest of the clues are usually found in the strategic, non-financial moves made by leadership. And all of these financial results, they were approved during a remarkably snappy 30-minute board of directors meeting on the morning of July 25th, 2026.
This quick meeting had three massive outcomes. First, they formally approved those unaudited Q1 financials. Second, they appointed Bhuvan Shekinarth as the new chief financial officer, effective immediately. Bringing in a new CFO right during a quarter of explosive profit and shifting assets, that's a huge signal of executive restructuring. And third, they approved a land conversion application under the HLTP. So, alongside the financial restructuring, there's a major physical transformation happening right on the ground.
Okay, let's dive into this acronym HILTP. It stands for the Hyderabad Industrial Lands Transformation Policy. Under this policy, Surana Solar is converting a massive plot of industrial land. We're talking over 14,600 square yards located at Phase 2, IDA Charlapoli. They're applying to convert this space from strictly industrial use into multi-use development. This is such a vital piece of the puzzle because it shows the company is actively unlocking the hidden real estate value of its legacy assets. It's almost like finding money hidden in the walls of an old house.
And they aren't just talking about doing it either. The board specifically noted that 10% of the conversion fees for this HILTP application have already been paid. This proves to everyone, investors, regulators, you name it, that this physical transformation is actively underway. The capital has been deployed, the wheels of local government and zoning are officially in motion. Seriously, a multi-use development of this size could be a massive future catalyst for the entire company.
Finally, Section 5, the auditor's final word. Let's check the independent review.
Whenever we see a massive unaudited profit surge happening right alongside executive changes and land conversions, we really need to know that these figures are following standard accounting practices. Enter the auditors. Attached to the company's filing was a limited review report conducted by Luharika and Associates, Chartered Accountants. Now, a limited review is pretty much exactly what it sounds like. It isn't a full comprehensive year-end audit, but rather a formal check performed according to the standards of the Institute of Chartered Accountants of India. Basically, their job is to review the interim financial information, ask the hard questions to the finance team, and run analytical procedures on the data to make sure everything adds up.
So the crucial point is their conclusion. After doing their review, the auditors officially stated, "Nothing has come to our attention that causes us to believe that the accompanying statement contains any material misstatement." In the world of corporate finance, that right there is exactly the kind of neutral, reassuring language you are hoping to see. It independently confirms that no red flags were found in the board's unaudited data. The massive 544 lakh profit, the other income, the asset shifts, it all completely passes the initial professional smell test. Which brings us to the ultimate question. We've decoded the numbers together. We've seen a staggering quarter-over-quarter profit surge, driven by really robust operational revenue in solar products, and bolstered by a massive influx of other income. Plus, we uncovered a new CFO taking the wheel right as the company kicks off a massive multi-use land transformation under the HILTP. Every single one of these vectors is pointing toward a period of intense transition and growth. With a foundation that has been this dramatically altered, what will Surana Solar's next quarter look like? Will the solar products segment keep dominating? And how will that new land conversion ultimately impact their balance sheet? It's a truly fascinating scenario, and honestly, it's exactly why we always read past the first page of these reports. Thanks for joining me on this explainer, and keep learning.